Hi, everyone. Welcome to Financial Insights. I'm Linda, your accounting coach. So, we are continuing our conversation, our last session, I should say, about learning on accounting terms that every business owner should know. So, our last term for the month is net income or net loss. And there's a lot of misconceptions about what that means and what actually, if it actually should be measured regarding small businesses and nonprofits. And in its simplest term, net income is really just revenue minus expenses. So as your organization starts to grow, you'll have revenue minus expenses, minus taxes, minus interest, and that's your net income. So if net income is positive, great, that's a net income. If it is negative, it is a net loss. And a net loss means that expenses is higher than revenue. And one of the misconceptions about net income or net loss is that it's the same as cash, and that is not the case. So if your revenue is $100 and your expenses is 50, so that means your net income is $50. And so just because you have $50 in net income does not mean you actually have $50 in the bank. So, I always say in accounting, when you're looking at your financial statements, you have to have this dual mindset and understanding how all of these things tie together. So, and you may say to yourself, well, why is net income important? And it's important for several reasons, and it depends on the stage that your organization is in. So, if you are a corporation, investors, that's for them. They are looking at net income and net loss because they want to calculate earnings per share. If you are a small business or nonprofit, you know what? You're really just looking at managing that cash to make sure that there's cash coming in the door so you can actually pay the bills. You can, make the product or services or be able to, if you're a nonprofit, to put on the programs and services. So, with once again, this is why I say, you have to understand I would say your stakeholders when you're looking at your financial statements, understanding, okay, who am I sitting in front of? Because if you're sitting in front of a lender, yes, they are going to look at your net income because they want that income they want to see that gradually increase. They want to see some traction. Now, if you're a corporation, those investors, they want that number, to be continually growing and growing and growing. For small businesses and nonprofits, I really suggest you focus on not only net income, but also revenue and cash. Those should be some of the main metrics that should be on your dashboard, things that you're looking at on a monthly basis. So, if you have not looked at your net income for the last 3 months, I would suggest you do that. I always recommend when you're looking at your financial data, always look at like a trend. So, we are in the month of August. So, look at once August is completed, look at August net income, look at July, and then look at June. And what you want to see, you do want to see a gradual increase because the net income is an indicator of financial health. So, once again, if it's gradually increasing, that's an indicator that your organization is on its way. And remember, just because it's increasing doesn't mean that that cash is also increasing. So, you have to understand that relationship between the two. And I'll make another video actually regarding more about the relationship between net income and cash because it really depends on the accounting method that you're using, whether you're using accrual or cash basis. So, you know what? Let that be your homework for this month. You know what? Go back, look at the last 3 months of net income and then also cash and just, see what it tells you. And if you have questions, definitely contact your accounting professional to understand what's going on. And if you do need help, definitely contact us at Insight Financial Group. We'll love to help you. So we will see you